Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Start the music there. I'm not sure if I feel so good this morning, but I think that we're going to be able to move past this. Today is going to be an interesting day. We do have some significant data points that we're going to look at here, some leading indicators. But there's also, we're kind of in this limbo before the non-farms, and treasuries are on the up move. So way this market goes, it could be it's kind of one of those situations where normally I'd be like, I don't know if it's worth participating in this market, but we might actually get something big out of this. So you can see overnight, the treasuries moved up considerably over. Oh my gosh, is it showing the wrong screen again? Freaking hate that crap. Why does it do that? It's so annoying. There we go. Wait, this one is wrong. Let's change that. Properties. I don't know why it does that. Primary monitor. There we go. So then if I come over here, and can I zoom in? Nah, it's still does the weird thing. Zoom in. That's okay. So you can see here, we moved up significantly in the treasury overnight. Okay. S&P 500 still within the range. We had a pretty ugly sell yesterday, but it's still within the range, and now we're kind of probing to the upside. Again, normally I'd be like, there's not too much here, but if the data goes the right way, this could be a really good, right? Oil is on the downside too. I guess that's kind of good, but not a good sign about that they're bullish or that they expect the economy to improve. Gold and silver. Gold doing really well, right? Gold all the way up to above 1850 and 1900, not too far away. See them up at 1900 again would be interesting. Kappa struggling this morning. So China not doing as well, maybe. Then we got the dollar taking a little bit of a hit after such a strong move yesterday. And the Bitcoin, a little bit of a move overnight. They're still below 1700, but so let me come back over here. So there's no news at the bottom of the hour, but we get US ISM manufacturing PMI at 10 o'clock Eastern time. Oh, I should minimize that. And so that's a leading indicator. That's really important. Then we get FOMC meeting minutes midday. So I think that what we may see here this morning is the equities could potentially rally on the interest rates being back below 3.7. And then depending on what those numbers say, especially, so their expectation is 48.5. If that's in line or below, that could really help the because the whole concern is the Federal Reserve is going to have to keep raising interest rates and keep being hawkish, etc. That's the fear, right? And if you show that the economy has slowed down and it's not hot, and that's really going to relieve a lot of that kind of pressure. And so seeing the treasuries down, that's kind of what it's hinting at. If it continues, then I think you could see a rally in the S&P 500. And if they're able to get back to 3,900 and above again, then it could really turn into something hot. I do kind of feel like there shouldn't be anything too big before the non-farms Friday, but I can't help but see that setup Again, this all kind of based on that the Treasury's just had a significant move up. Now for us, I don't know. So the liquidity is looking better today. 8-2. And Meishan, by the way. Meishan's like always first one here now. Thank you. I don't know. For us in the Treasuries, liquidity is better. So I don't know if it's appropriate for us to be looking for a strong trend today, but we might get some business that allows us to, do something here. Yeah. Would be preferable to sell it, but let's just kind of see what they got. Is the volume actually there? Because at the moment looks kind of stuck. Also, considerable steepening in the curve. See, like the difference between the 5 and the 30. 1, 2, 3, 4, 5, 6, 7, 8, 9 ticks. Like that's a big difference. I bet 4 p.m. was likely fueled at least in part by rate lock hedges being lifted as deals got priced. That could be. Is there a pop at 4 o'clock yesterday? Might be talking about going into the close. So I should go through that, shouldn't I? Hold on a second. Let's see if I can fix this thing. This is driving me crazy that the script doesn't work correctly. It's like the source that I'm on and the Zoom source like don't match up. So like I come over here. Yeah, it's all screwed up. Aha! Now I got it. Okay. So here is the 2 and 10. The 2 and 10, it's not too significant. That bottom data series, okay? But you can see a little bit of steepening. It's kind of up. It's kind of moving up, right? But look over here at the 30 and 5. Very, very significant difference in the 30 and 5. So that is a little curious to me. I think we need to keep an eye on that. For the moment, though, they're kind of stuck up in here, right? They're kind of to a point where it's a little bit difficult for them to stay above that, so we'll see how they handle it. Oh, wait, what? That's not right at all. What the hell? Oh my gosh. I think that doing that and like well, that's not right either. It has changed my source. Properties here. Sheesh. Okay, maybe I can do it this way. Center. Aha. Yeah. Close. There we go. Okay. Hey, Tobias, how have you been? We've been okay so far. Now it's doing this shit again. That is so freaking annoying. This script doesn't work very well. Oh, you're in Asia? What are you doing over there? Raymond, I've been using Ninja Trader 7 since it was released and learned some new things in the advanced tips. I know how much... Oh, dude, yeah. That was so much work to make that video. It was like just figuring out all of the stuff to say and then editing it all. Yeah, it took a long time. Oh, you're in Hong Kong? That's cool. So my dad, you know, we live in Utah, so we're Mormons, and my dad went on his mission to Hong Kong. And I think it'd be really cool to go to Hong Kong, but kind of like seeing how like the political situation and stuff has been lately, I don't know if that's ever gonna happen. All right, well, I'll have to do it this way again today. I don't even know how I fixed it. Okay, so there was that really big change steepening, and since then it's kind of come back a little bit. And we are seeing the dollar. We come back over to here, we are seeing the dollar kind of come down a little bit, so. The food is still very good. My dad said that when he lived there, you never got cold water. It was always hot water. And that they served like lots of fat. Like the thing that was like, if they were having a special celebration or they special guests, they always served like just raw fat, which is like, what? Oh, he's got stories. He's got stories. I think one of his best stories would be, they'd go over to this house and they had like a lot of dogs. They had like a dozen dogs. They'd come over and all the dogs would be jumping on you and everything. And it was fun to go over there because they had so many dogs. And it was just like every time they go over there, less dogs. And like they say, like people say that as a joke, but like he was literally for weeks had been eating dog and didn't know it. that really happened. But as a kid, you don't know that sort of. So you're like, wait, where did they go? What happened to them? It's so funny. Raw fat is a delicacy in Ukrainian culture as well. Salo is basically raw pig fat. Can't have too much. Really? No, they have so many choices, but never had dog over there. He also told me a story because he lived in there. There's like this one block that's like the most densely populated square block in the world, sort of a thing. Well, that was one of the areas that he served. And, so he was kind of in those like really densely populated, not very wealthy areas. And he told me a story about a rat. He said that like they woke up in the middle of the night and they could hear like a scratching noise. So they went and opened up their dresser and there was a rat in there. And the rat jumped up out of the dresser and it was literally as big as a cat. And they said that when they were out on the street, they would see people were having fights where a rat and a cat would be fighting with each other. And the cat did not always win. So this is huge rat. They're chasing around the apartment. And finally, one of the guys found a wicker basket and trapped the rat in the wicker basket. And so they're sitting on top of it, trying to figure out what to do. And the rat eats through it like real quickly, of course. And so then they chase it around a bunch more. And this time they get like a metal bedpan sort of a thing, right? And they get it. But they don't quite get it completely over the rat, right? Like the rat's head is still sticking out. So one of the guys took a butcher's knife and lopped its head off. And that's how they killed the rat. Yeah, Kowloon. Yeah, that's exactly where it was. Yes. Oh, he has so many stories like that. So as a kid, I was always like, oh, someday we should go to Hong Kong. Maybe now I'll go to Taiwan. I don't know. I think that travel is maybe one of those things that happens like 10 years from now when, after we've become a successful fund manager and all that sort of a thing. Because one of the key things is I would want to be able to spend more time learning the language. And I just, these days, I don't feel like I either don't have enough time or energy, or I just don't do it. I don't know. Maybe I'll have some more time to do that in the coming weeks, though. Things are starting to, I don't know. It's probably actually about to get worse because the baby is crawling. And if he's anything like Asher, well, he's not like Asher, so it probably have a little bit more time. But as soon as that kid started walking, it was like he couldn't do anything. But just, make sure that he didn't kill himself. So maybe I won't have as much time as I want. But anyways, I'm being a little ADHD this morning. This time I picked up a lot of Cantonese words. I can order food. That's more than enough here. I think, man, I think Chinese is such an interesting language, but there's something about it that makes it so incredibly difficult. You know, they say that like Chinese is difficult for English speakers to learn because it has, you know, the tone of the way that you say something, and whether it's a rising or falling tone changes the meaning of the word and the sound and so forth. Well, maybe recognizing the sounds, that's probably hard. But the thing that I find hard is that all of their words are so terse. So like almost all of their words, well, not all of them, but a lot of their words are just consonant vowel, right? So trying to memorize words is super hard. Like the basic stuff, super easy. It's like, oh wow, this language is so interesting. And then you have to start memorizing things, and it's like, oh crap, this is such a pain in the butt. And it seems like it's harder to memorize things as I get older, you know? So yeah, and the words in Cantonese are super short. So since it has, let's say, 10 short words, that makes it hard to remember. Yeah. And Cantonese is even worse because there's more tones. There's like 5 tones instead of 3. I do, you know, last night I played Sonic Frontiers. So it got to the second major boss was such a pain in the butt. It was like I was really liking the game up until I got to that boss. So it was way too hard and like frustrating battle, but I digress. So if I had time to do that, I guess I have time to learn Chinese, right? The funny thing is I'm always sitting here like, oh, do I have enough time to do X, Y, and Z? Probably I should be spending that time studying, because I 2 weeks out from doing, I haven't set a date, but I could take Series 65 exam in 2 weeks, and I should be focusing on that more. I find it hard to study without doing the tests. You know what? We could do some right now. You want to do some right now? I don't like the time difference over here. The New York regulars. Oh yeah, I bet. Do a little bit of memorization. Let's see here. I think it was like page 11. No, no, it was earlier than that. Here we are. So we're trying to memorize this list of securities. It's kind of interesting because it actually becomes easy to memorize what is a security and what is not, but what, like the full list of things that they might actually potentially ask you about is interesting. So what I want to do is I cover it over like this. Okay, so stocks are securities. So are ADRs. ADRs are American Depository Receipts. So that's basically like a stock for a foreign company, right? And then let's see here. I think that we do bonds. Yep, bonds and options. Oh, rights and warrants. So a rights and warrants. Rights are rights are like if they're offering more shares, they'll give you the right to get more of those shares so that you don't get diluted. But that's what rights are. Whereas warrants are kind of like sweeteners to, like, when they're doing this often happens when they're doing like an IPO or like those SPACs, they would do warrants that kind of like an option, but like longer term. And then we get to options. So options on stocks, currencies, commodities and futures. Yep, there you go. Okay, and then I think the next one that they're going to have on this list can be variable life insurance. Yep, and variable universal life insurance. Any insurance product that includes the word variable. Oh, okay. Hypothetical settlements. Now this one doesn't make any sense to me. Do any of you guys know anything about hypothetical settlements? I mean, like it talks about them and it covers them, but it kind of like, they don't cover it very much. It's kind of like, it's not something you're gonna run into very often. But like basically, it's like a bet on how long somebody will live. Which and apparently it's like you only do that on a rich person, and you and to invest in those sorts of things, you're going to be a rich person. But it's a thing. Okay. Oh yeah. Variable life insurance, variable annuities, same thing. Okay. Now this is the part that I have a hard time remembering, is these last groups. Okay. So that was investment companies. Yeah. I think the next one is like multi-level marketing schemes. Oh, packaged real estate. Yes, packaged real estate is good. Counts. Participation in a profit sharing agreement. Okay, now we get to the ones that I'm as well. Investment contracts. Voting rights. Oh no. Limited partnerships. Then it's the multi-level marketing agreements. Oh, whiskey. See, I can't remember shit. It's so hard to remember things these days. I'm just trying to memorize this list in the order of them. It's super hard. Investment contracts, limited partnerships, whiskey depository warehouse receipts, then multi-level distribution arrangements, then merchandise marketing schemes, is I think what it calls. Yeah. Oh, I don't remember the last. Oh, voting rights. Reorganization certificates and interests and livestock. Why do I find it so difficult to memorize that second half of that list? But you get what I mean, right? It's like, $36, $37 now. Okay, what about cryptos? So cryptos is kind of an interesting spot. So there are four. They won't test you about cryptos. Obviously, the regulation hasn't updated. Okay, but whether something is a security or not, it's based on the Howey test. So it's an investment of money with the expectation of profit solely from the effort of other people. What was the fourth bit? Oh, in a common enterprise. Okay. Investment of money in a common enterprise with the expectation of profits solely from the efforts of others. Okay. So some people So here's where cryptocurrencies get kind of weird, is that they say, oh, we're going to mint this cryptocurrency. So this cryptocurrency does not give you ownership of the company. It doesn't give you a right in the company or anything like that. But if our company does well, then the cryptocurrency will become more popular and you make money that way. And so this is how they're able to come in and make this sort of situation where like it's not really a security, because is it really an investment of money in a common enterprise? It's not. It's kind of a Ponzi scheme, actually. It's what it is. But the key thing here, though, the argument that I would make is that whether or not it's an investment in a common enterprise and so forth, I think that the rules surrounding securities should still apply to them, particularly around disclosures, right? Like they should have to disclose things to you. They should have to like give regular reports on their business, right? Because what's happening is they'll mint a coin, you don't know anything about the people, and then they cut and run, they're not doing anything, right? That's what the XRP guys are arguing about, right? Yes. Now, the other thing though is that this could be different between different cryptocurrencies, right? So some are just like, we need a new coin. Some are like, we're making a new coin, and they were kind of making it like you were investing in their company, even though they weren't. They're kind of towing the line, right? Okay, Kashkari saying something hawkish. Treasury's moving down. It's not too big. Nick Timmeros, Minneapolis Fed President Neil Kashkari says he penciled in another 100 basis points and rate rises this year for a terminal policy rate of 5.4. This despite increasing evidence that inflation may have peaked. Interesting. Right. So it will be appropriate to continue to raise rates at least the next few meetings until we are confident inflation has peaked. Any sign of slow progress that keeps inflation elevated for longer will warrant, in my view, taking the policy rate potentially much higher. I will not know if that is sufficient until Fed pauses for a reasonable period of time. Yeah. So we're back to this whole thing that it's like inflation is peaked and the Federal Reserve is probably destroying the economy, but we won't know for sure until the economy is actually deep into a recession. Okay. But that was a pretty hawkish statement from Kashkari. I think that statement alone probably, destroys any hopes of buying here today in the treasuries, at least before yeah. Okay, so I think I would have to get like a good fill here to justify doing something, because the spread in the 10-year has increased so much, but A lot of it is a channel game. I do find it interesting that like when we're in a range that it seems like that's when all of the retail traders want to come in and make a prediction about what it's going to do. When it's like, that's like the least uncertain time. Anyways, what were we talking about? We were talking about, oh yeah. So my point was like, okay, so why does it matter whether or not something is a security? Well, because you have to like register them and stuff, right? You have to register the security, and there's all of these rules around it, right? So the cryptocurrencies have basically become a way to like raise money without having to go through this securities laws. It's so even though there's like this question about whether or not it's actually a security, I think that it's irrelevant. I think that all of the laws should still apply to them. Why should the laws not apply to them? You see what I mean? Sorry, this is just kind of like, this is one that gets me going and I think is really important, right? They're lying to you guys, right? They're saying, well, they're not securities, so we shouldn't be held to securities laws. Why? Right? They're arguing the point over whether or not it's a security is a distraction from what should be the question, which is how should we actually regulate them? And why would the things that we regulate traditional securities with not apply to cryptocurrencies? What's special about a cryptocurrency that they shouldn't have to disclose things, right? They should have to follow the same rules. The Dodge father. Now, I'm not saying that it's all so simple, because think about, okay, so if Seth gets his way. Seth gets his way. Creating your own cryptocurrency token is a security, and you have to register it in order to do an initial coin offering, right? So what if I just decide to make a coin, mint myself a certain amount of it, and then put it out on the market and let it start trading? Are you saying I can't do that unless I register with the federal government? Because people can still like print them, but it wouldn't be registered, and there'd be all of those sorts of, it would be kind of a weird world. But I think that they can handle it, right? Economists search for theories on why fewer people aged 20 to 24 are working or seeking a job. Because they're in school, dipshits. Man, am I cranky this morning? I guess I'm cranky. You know what happened to me, actually? Wait, here's why I'm cranky. Is I went to the dentist yesterday, and that was all good. But sometimes they'll kind of open, they get in a spot that had calculus, and then your gums haven't like readjusted to it. And I think that like a piece of food went in there or something, because I don't know, it like got super inflamed. And it was like, it's so inflamed, it was giving me a headache, and I had to take an ibuprofen to go to sleep. And then when I woke up, I woke up like hard wake up. Like it's hard to wake up and you were still in the dream and stuff like that. So I think that's why I'm cranky this morning. And maybe a little bit ADHD and going between subjects and so forth, right? Crypto is like the Wild West days of Forex. Yeah. Well, I mean, so this is where it gets kind of interesting to me. Okay, so let's go down through this other list. What are not securities? Art, antiques, and other collectibles. And then currencies, commodities, and futures. So why are currencies, commodities, and futures not considered securities? Well, a currency is not a common venture, right? And futures are like standardized contracts that have to go up against, that have to be verified by the CFTC. Now, there's also like commodities. You can do like direct commodities contracts, and I don't know what kind of rules there are around that. Maybe we learned about that in Series 3. But for currencies in particular, right? So why don't currencies have to do all of the same kind of rules that there are around securities? Well, because it's a government, right? So you get the disclosure that you need because it's a government. That's why they're not. That's why they're not governed by securities, right? And you get these other ones, so like life policies. So these ones are not investing in the market, and the insurance company is assuming all of the risks. So that's why those ones don't fit under there. Same with endowments, fixed annuities, right? Individual real estate properties and mortgages. So now that's where it kind of gets a little fuzzy, just from the thing that we're talking about, because maybe there should be more disclosures around real estate. I don't know, but that wouldn't be very practical, right? And then these last ones, Kyoga plans and IRAs and stuff, because these are not securities. These are types of accounts, but they'll try and trick you. Right? We'll put that away for like maybe 30 minutes, and then we'll come back and see if I can. So what was that? It was investment contracts, limited partnerships, whiskey warehouse receipts, multi-level distribution arrangements, merchandise marketing scheme, voting or collateral trust certificates, your organization certificates, and interests in farmland or livestock. Yeah, the XRP story will be interesting, but because here's what I think he should do. Here's what I think should happen. I don't think that XRP should have to pay like a penalty or anything like that, but they should be forced to be like a security. They should say, okay, well, you're not a security, but we're going to order that you still have to follow all of the requirements of a security in terms of disclosures. And we won't impose a penalty, but you have to disclose. That's what I would do. Right? And then see how that turns out. Is there something XRP doesn't want us to know? I guess we'll find out. Like, because here's the mindset that I want. I'm trying to teach you guys something a little bit bigger here, and this is just kind of like a small part of it to kind of get you to thinking like that. But here's the bigger picture idea that I want you guys to have in your minds, because the thing that I constantly hear is like, the way the Federal Reserve works, it's not fair, and yada yada. They can just print all of this money and make all this money off of it, and we can't do anything. That's not true. Anybody can print money. Listen, anybody can print money. You just have to get somebody to underwrite it for you, right? Make a loan and it has to be underwritten, or you can offer a bond and it has to be underwritten. Although that wouldn't really make sense if you just do it with a personal loan, okay? But anybody can go to the bank and get a loan, and when you do that, you're printing money. You're literally printing money. That's the way that it works there. I mean, they have to have reserves and all of this sort of stuff, but the reality is, in practice, they're just making money up in an account. That's what happens, right? So anybody can print money. It's just that you have to be able to pay it back, right? You have to be able to pay it back. That's the only thing, right? Well, it's the same with companies. Anybody can start a company. Anybody could go and try and start a C Corp, right? It's just, you have to have actual business to make profits for people to invest in it, right? So you have to have a good idea. So really, it's not cheating or anything. It's just, it incentivizes the people that have the ideas, that are able to create cash flow and pay the money back and so forth, right? And that can be you. And that's what you should be working towards if you really want to make money, right? But everybody kind of thinks of this as like, always takes it from this scarcity mindset that your animal brain starts from, where there's a limited number of resources out there and you can only get so many of them and stuff, right? We don't live in that world anymore. We live in a world where you can make just about anything, you know, if you just go and create the enterprise. You just have to have the ideas to go and do it and follow through with it, right? because Bitcoin futures correlated with NASDAQ, they have been. Not as much as they were, but they're still roughly correlated. Okay, so the markets did not like what Kashkari said, but it appears that the Treasury futures have recovered the downside. So whatever buying it is that's out there, I don't know. I'm not seeing like a huge shift in cumulative delta on the long side here. But they did recover really easily, so that kind of makes me think that they are going to continue up. I think that a trade I could pull off here, I'm just going to yeah, we'll do it right here. I'm just gonna do it with a sim order, okay? But I will put like try and play around this big order because it seems like that they might want to rise here. Rinse with salt water and baking. What are you talking about now? Let's do a review of our investment contracts, limited partnerships. Maybe what I should do is try and make a word thing. Here. ILWMMVPI. We need to come up with a sentence that uses those words, use those letters. Do you have any experience with a prop farm? Wait, you actually mean a farm, or are you referring to like the funded trader programs? Yeah, funded programs. Okay. This is what I thought. I was like, that doesn't make any sense. So maybe I should make another video about prop funds because those tend to do really well. I've gotten to this point. One of the things I was getting to, but I've been too ADHD to get to talking about it, is that we put out a video yesterday about NinjaTrader 8 that's doing really, really well. And like overall, when I'm looking at the metrics on the channel are looking really, really good. Even though I haven't been as up on doing, putting new videos out as well. But what's happening is the videos that I made in the past are so good that, the algorithm is finally kind of caught on them, and they're all kind of starting to do well, especially my ones about the DOM and so forth. So and then this video is doing well, and it's like, oh, well, what if the channel blows up? Because I'm not really sure what the next videos that I want to make are. I think that one video that I want to make is how much money do you need to make, or how much money do you need to start trading? And this is kind of relevant to the whole question about funded trading programs. So here's what I would say about funded trading programs. Okay. Futures trading, I mean, trading in general, but futures trading in particular is extremely difficult. And the reality is that most traders, it takes them years and years and years before they're even like breaking even, let alone making a profit. Okay. So and when I say years and years, I mean like 5 years or more. And that's like 80% of traders wash out before then. Okay. So it doesn't really make sense if you are a new trader, say less than 2 years, to come in and think that you're going to put a bunch of cash into an account, or you're gonna do a funded trader program and have success with that. And you might be able to swing it and get lucky, okay, but generally speaking, it takes years and years to get good at it. So the reality is that for the vast majority of people, the funded trader program doesn't make any sense. So if you're new, you're probably not going to pass the program. And yeah, it's only $150 a month, right? I guess if you do, for when I was doing things, I would have taken me 2 weeks, 2 months to either get to the target or blow things. And so it's actually $300, right? Well, it's $300 that could have gone into your account, right? You just do that twice, like a 6-month period. You already have enough money that you could have started your own account. And yeah, you would only be able to trade micro contracts, or you would be just trading sim, but that would have been a way better investment than failing the combine program, in my opinion. And the problem that I have with the funded trader programs is that the way the rules are set up really encourage you to take on a lot of risk, because they're basically asking for you to like make a 30% return in a month. It's a little crazy, the amount of performance that they're actually looking for. So that's why the vast majority of people that do the combines fail them, and that the people that do get combines, the vast majority of those lose the combine within 6 months. So if you have performance that you think can regularly pull a combine, then go for it. If you understand that it's kind of a little bit like a shot in the dark and just see how much money you can make before you blow it, sort of a thing, then go for it. But if you're playing the long game, you really like trading, and you want to be able to just keep trading as long as possible and get as good at it as possible, I think you're better off starting your own account. And that's what I do. So I start my own account. I'd recommend saving like $1,500 and trading micro treasury yield futures and only risking like $10-20 a day. And that can keep you going for years. And I think that teach you a little bit more restraint, and instead of like going for the YOLO all the time, which is kind of what the combines make you do. Saw a guy just YOLO in 10 lots to pass. So I was talking to which one, I forget who it was, but they don't calculate the drawdown until the end of the day, so you can always save the account. And they don't have any like minimum activity requirements or anything like that. So it really did. I kind of feel like if I was going to do it again, I want to do it with them, to YOLO into it and do it with that, because I've definitely gotten in these periods where I think that I would want to do it in a period. Actually, right now might be a good time to do it, because we got non-farms coming up and everything, right? To just be like YOLO on non-farms and YOLO on CPI. Pass the combine, probably could. Coinbase settles with New York regulators for $100 million. Ooh. I'm not sure what they're settling on. Let's see, what are they settling over? State financial regulators found the company had allowed customers to open accounts without conducting sufficient background checks in violation of anti-money laundering laws. Anti-money laundering laws, prompting a $50 million fine. The Times said another $500 million will be required to boost compliance efforts aimed at blocking potential criminals from using the exchange, it reported. I think I was like a little bit too verbose on the whole thing about funded trader programs. So, I should have started with, I think you're better off funding your own account and trading micro futures. That's probably not what people want to hear, but I think you'd be happier in the long run if you really want to make this a long-term thing. I mean, that's kind of the hard thing about it, is I don't know that everybody that tries to do futures is really thinking from the perspective of, oh, trading is so much fun, I love markets so much, and I just want to be as involved as possible. Because that's me. Like to me, the amount of risk that I'm taking is really minimal. And if I lose the money that I put into it, to me, it's worth it to be involved in the market, right? I don't think that everybody is thinking of that. I think that most people are thinking, I want to be rich, and trading is maybe the one way that I have of getting rich. Well, it's not true. Trading is probably like the hardest way to get rich. In reality, you want to get rich. Like I said, anybody can print money, guys, and anybody can start a company, and anybody can offer, can create a company that offers shares to the public and gets public funding and everything. You just have to have the ideas. You just have to have the ideas, guys. Okay, so Jonathan Carvalho asks which instruments I'm using up here. So I do have a video where I walk through everything in my setup, but real quickly, what I have up here are mostly the treasuries. So this one on the far left is the S&P 500 futures. And then I've got the 30-year, the 10-year, and the 5-year futures on the top. And then the bottom are the micro treasury yield futures. So I got the 2, 5, 10, and 30 down there. And normally, these days, I've been doing most of my trading down here in the micro 10-year. Or I do some trading up here in the 10-year. So I put these ones up here because I thought that maybe they would break out to the upside. It looks like that's not happening, so I'm going to cancel those. It's kind of hard to see it, but you can actually see the instrument name at the top of the windows. Yeah, no problem. And then, yeah, I have like a really long video about like everything that I have in there and why I have it set up the way that I do. So that if you want to like duplicate my workspace, that would give you all the information to do that. And my nose itches like crazy all of a sudden. Oil turning up here a little bit. S&P 500 starting to turn up. I'm still wondering if the S&P... Kashkari's comments concerned me, but the market seems to be shrugging it off. So maybe we do get some bullish action here today. Note that we have that manufacturing PMI at the top of the hour is a pretty significant data point that we want to watch. So, I want to check here, see if I missed anything. Yes, yesterday I found a way around the filters in ChatGPT. So I asked, so people were like, "Oh, ask it to write a story about Kathy Wood." So I told it to write an erotic story about Kathy Wood losing money on Tesla stock. And it was so funny, but it was very inappropriate, and I could not share the whole story with you here. But it was funny. And I put the link in the main chat channel, the Discord. Bradigan Barrett market pricing currently only 33 basis points for February and a total of February after March meeting. So a real pricing discrepancy. This will likely drive early weakness in risk markets at the start of 2023. Trade Low Trading saying Fed FOMC minutes likely to drive markets for the week before key NFP Friday. Note how strong the consensus is from dot plot for 75 basis points hikes in early 2023. Do you let any, so I have a bunch of automated strategies and some experiments that I was doing, and I often forget to run them. To be honest with you. I don't think that, maybe they could work, but the algorithms aren't completely up to what I want. I really want to include some like hidden Markov models and machine learning stuff in them. So I should probably be running them and I forget, but they're not, I don't really care too much about them. It just kind of shows you. Like you notice over and over again, like I'm really interested in the automated trading thing, but the kind of robots that we're making, I really feel that to be successful with them, you have to be fast. And I'm not interested in like setting up a whole operation with co-location and all that sort of thing right now. I mean, I know that there's services to help you do that and everything, but it's just not at the top of my list. And I would like to go more into like portfolio management. So I'm thinking that that's probably more interesting ground to do some of the, back testing sort of stuff. But I have a ton of videos about how to write the robots and all of the actual technicals, actual doing of it. Okay, that's interesting. The Treasury's back down here at the lows. A little bit of a attempt to kind of claw some of that back, but still feeling heavy. And the S&P 500 starting here. Let's just real quick come back over here to the charts. So you can see after some initial steepening, especially since Kashkari has spoken and everything, we've gotten a flattener again. Maybe so, especially there early flattened. Oops. Ask because it is kind of fewer people in the Brazilian market to market make. Yeah, so if you're in Brazil, then you have access to those markets, and you can find some. So the key thing that I would recommend, if that's kind of the track that you're going down, is I would want to look at things like correlated assets and like fundamental estimates of an asset. Like, what should that thing be worth based on the supply and demand in that market, and it includes this asset and this asset, and then you can kind of get this, like, this is the price that it should be, sort of a thing. And then you trade the discrepancy between that. Basically you're looking for arbitrage, right? So I would look for some arbitrage trades, and if you can find a place where you can price the asset more accurately than the market is doing it, and make money from the arbitrage, that's the way to go, I think. It is really interesting to me that like we went down and then we came all the way back up to the top. They completely shrugged off Kashkari, but then they didn't bust the heist. So they decided to visit the bottom side of this range. They did expand the range a little bit, but I think that we're still stuck in a range, and I'm just not like getting really any clear clues. But there was some autocorrelated sell volume on that sell. So I think that we may be seeing, I don't know if it's a continuation of Kashkari per se, but there could be some large meta orders sell like we had yesterday, you know? And overall, it just looks a little heavy. I don't feel like I have enough information to make a move here, but I'm certainly feeling the desire to do it now. That volume to the downside is just kind of like screaming my name. I think though it's, you know, it's moving around a lot right now because of the open. That's probably why I'm feeling like that. Case in point, it's coming back a little bit here. So remember we had this whole thing about I clear my throat too often. So yesterday I went to the store and was like, well, let's try and find an herbal tea that will maybe help clear my throat up and everything. So I got like a ginger tea or something. Like, didn't help at all. Didn't help one bit. So I guess I'm just stuck being somebody that clears their throat way too much for the rest of their life. I don't know. No, I'm not going to try smoking cigarettes. You know what? Smoking cigarettes would probably help with a couple of the health problems that I have, but then it would make other health problems worse. So that's interesting. So there's a little bit of iceberging there at 11.5 and a strong bid at 11. They pushed through it, and they pushed through 12 on hardly anything. Well, you know, if it's some big guys getting involved there, that kind of turns me off. So let's come back over here and try and remember our little, okay, so it was investment contracts, limited partnerships, and whiskey warehouse receipts or whatever it's called. Yeah, whiskey warehouse receipts. Then it is the multi-level distribution arrangements, merchandise marketing schemes. Yes. Probably have a dry throat from all that. Well, that might help. I don't think that it's from having dry throat, although I might need a little bit more water right now, but I think that it's mostly like allergies. What came after merchandise marketing schemes? No, I have to cheat. Voting or collateral. Okay, trust certificates. Organization certificates, and then interests in livestock or farming. Yay! Okay, so it's just that one, voting or voting. We did better. Okay. Still, actually, the stack at 11 has gotten bigger. Tesla position is looking good. I couldn't resist buying. Well, yeah, man. So I think that like buying the dip sort of a thing on that, in that sort of a situation, I think it's a gutsy trade. It can certainly work, but I'm personally not really interested in getting involved in Tesla because my big thing is that what I see is a stock that is nowhere even close to what fundamental value could ever be considered. Instead, what's happening is the public likes it, right? It's overvalued because this is the same thing with Apple. The Apple is like way far away from what any kind of reasonable fundamental valuation on it would be. And why is that? Because the public knows the name, and when people sit down and they say, "Oh, I should invest in I want to buy individual stocks," what would be a good company to invest on? The first one that comes to their mind, Apple. And so orders move markets, right? And so that sort of thing can push prices far away from fundamental value for a very, very long time. And the issue with that is that if something causes the selling in that stock, there's a lot of people to get out and so forth. And so now you can have it sell well below fundamental value, even though I think we're probably still well above what a fundamental value in Tesla would be. And my experience has been that when a company is the whipping boy in the media, that it's better to just not get involved. Apple is perfectly priced. Papa Buffett said so. No, it might do better than other assets, but they've gotten hammered too. Apple was ugly yesterday, right? But Apple is one that could maintain that elevated price because of its popularity for years to come. Tesla, a little bit different, right? Because Tesla has had a fall from grace. And I don't mean a fall from grace like, oh, the stock prices come down. I mean, a lot of the people that were interested in it and were putting the money into it are hate it now, right? And it's the media whipping boy. So again, you don't want to be involved when it's a media whipping boy. It used to be, so like it kind of shifts around. And I think it's better to get into something when everybody forgets about it, right? Like it used to be last year, the media whipping boy was Zillow, right? Because they bought the houses and all of the liberals thought that the reason that their housing cost so much was because of the investors buying things up, which isn't true, but that was the narrative, right? So if you tried to pick up Zillow, you got hammered, right? Now it's Tesla. And another one that's the whipping boy is Southwest. So when my wife and her flight attendant friend were coming around, they're like, well, you think it's like how long it will take to recover? Like maybe it would be worth buying their stock right now. I'm like, no, you wait. You don't want to do it while they're still the whipping boy. Like wait 6 months when everybody's forgotten about this and nobody's talking about the airline industry anymore, and then you buy it, right? Well, maybe it might not take that long for Southwest, and then even then, it's probably a long road back to making money from it. I need to start building a long-term growth portfolio. For Tesla? Yeah, So the key thing to remember here is like the fundamental value of it matters, yes, but the thing that's going to move it is the future orders. So all I'm saying is, so let me try and take everything that I just said into like a really specific, easily digestible prediction. Okay, so here's my prediction. The all-time high for Tesla has already happened. Tesla will never get as high as it was in 2021. Never. That's the prediction I'm making. There simply will not be the flows to support it because of all of the drama and everything and the politics. That's a heavy statement. Yeah, I mean, I know it's a heavy statement, but it's a statement that I can make with pretty high confidence. Right, because to what you were saying, it could make sense that you buy it now and a year from now it'll be worth more. But it will never, I'm just saying it's never going to make it back to the all-time highs. The thing that I think is really funny about Tesla is like everybody's talking about, oh, Elon had to sell more stock and everything. But like, the whole thing is he was telling people the whole time that he thought it was overvalued. Like he thought it was overvalued, and so like he took his profits and y'all made it easy for him. Like that's the thing that's so funny is that the way that this all played out, they made it easy for Elon to get out, to pull billions of dollars out. If Jeff Bezos all of a sudden decided that he wanted to share all of his Amazon shares, I don't think that he would have he'd get nearly as good of an exit, right? It's funny how that turned out. Now investing, so remember, first thing first, if you're in the United States or, and I think that they have similar things in European countries, the first thing is that you want to max out your 401k. Okay. So your employer will match contributions up to a certain amount. So you want to max out their contribution because otherwise that's money that you're losing. And then second, you want to be putting money in your IRA because a Roth IRA is incredibly flexible, right? So it's not tax deferred, but it is the stuff that you pull out of it, you don't pay taxes on, right? So you don't pay taxes on the gains. That's a really good deal. And the IRA account, you can take contributions out of it for like medical expenses and for education expenses and stuff like that. So put money away in your IRA, okay? If you're doing those two things, and then you want to start a stock portfolio to practice or to have fun with, then go for it. But what I would recommend is try to put together a portfolio of 5 to 10 stocks that you can do 10 to 20 hours of research a week on your list of stocks to keep up on what's going on with them. That's what you'd have to do. And we call that your Mad Money account. But if your goal is just to increase your savings for retirement and everything, you want to max out those other accounts, right? Now, if your goal is to get rich, well, not to get rich, I think there's another way of going about this, and that actually probably makes more sense for a lot of people, because really what I think a lot of people want is better cash flow, right? Like I wish I had better cash flow that I could use to put more money into stocks, for instance, right? So to get cash flow, probably the best thing for you to do is real estate, right? And you can invest in REITs, but generally speaking, a individual investor will do better in residential real estate than a REIT will. So it's better. It's work though. You realize it's a lot of work. Okay, but that's cash flow. that would be a good way to go about things too. And I got to tell you, I mean, I think that you have to already have a wad of cash for this one to work. But I think that if I had the wad of cash, I would be buying right now. Like, no joke. I think that I would be trying to buy into the real estate and getting some investment properties right now, because what's going to happen, or what could happen, like could really happen, okay, is everybody's saying that the economy is going to be really rough the first half of this year, and the market is kind of pricing that the Federal Reserve will have to back off on the interest rates, right? So you can buy now when the housing prices are cheap and then refinance the house in a year or maybe even 5 years. Like, because I think there's a really good chance that you could get like a sub 2% interest rate again before the life of the loan is over. So you would make it worth it. You get a low enough price right now. You get a good enough deal right now. So it's worth considering, I think. Buy a shit ton of utilities. You don't get that much cash flow from that. I mean, I would like cash flow. I think for me, although I would like to do real estate, I really do. I find it really interesting. Yeah, it would have to be a shit ton. You'd have to have a ton of money to begin with, right? I feel like that kind of strategy doesn't start to make sense until you're in the millions of dollars. Uh, 10 minutes to the news. No, but for me, I think that it comes in the form of, like, if I want that extra cash flow, you know, it comes in the forms of business, right? So we have our indicator package. I'm quite proud of the indicator package. Like, honestly, I don't talk about it enough. Let's just really quickly come over here and look at what's been going on. So we had like this really big spike in the spreads between the 5 and the 30, but it was pretty short-lived, and overall we've flattened. And especially when you start to come over here into, like, oh sorry, the knob spread. Now this is the knob spread that flattened pretty quickly there. So curious, but we are overall getting, if you look at the middle data series there, we are getting selling cumulative delta wise. But we're kind of ranging, so I think that was the appropriate response to sit tight until the news. And here we got the S&P 500. There's been some swings on both sides, but it's kind of just been a mess since they opened. So I think that we have to wait until this news in 10 minutes. But anyways, the spreads, that is an indicator in my paid indicator suite for NinjaTraders. NinjaTrader 8. Oh, actually, that's a good question. I am still using 5.2. Oh, you know what? When we changed it, it didn't. When we changed it, I didn't save the workspace. Let's go back and change that. Now's a good time to get in markets. Yeah, now, I mean, that's specifically for real estate. For the stock market, I think that you could put some money to work right now, but I wouldn't necessarily be rushing to put it all in right now, right? So now I need to go find the... Or no, I have to do the see me thing, huh? For what it's worth, there's way too much negative press out right now. Yeah, I think like one of the things is that I'm definitely seeing like excessively negative sentiment, you know? And you're in T-bond. Oh, it's just 2-1. You know what? That didn't really change the chart that much. You see it didn't change it too much. Didn't change it too much. Just a little bit. Did the 2 and 10 change too? Two-year, 10-year, 3-1, but it's a price ratio of 6. Oh, so should this be 6-1 now? Well, let's see, how does that change it? No, that's not right. Oh, Tot is 4-1. Tox is 6-1. Yeah, I was reading the right one. You're right. There we go. And now, what I need to do that I didn't do last time is come in here, workspaces, save. That's a little better. Anyways, the indicator suite, it has those spread charts. It also does this dollar index. It also does these little market depth tapes that will alert me with little clicking sounds when there are significant changes on the depth of market. And a bunch of order flow tools, a bunch of things that I find useful and I can't trade without. So you can check that out. Link in the description, speculatorseth.com. So that's one side of the business. And there's a YouTube channel in general, just makes money from helping people. Maybe someday we make a book. Something I thought was funny is there's a lot, you know, like last year the big thing was like start a course, and everybody was starting a course, and now I'm hearing from all the influencers on TikTok, don't start a course. Nobody wants to buy your course anymore. Blah 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 blah. And then I get on YouTube and Sunny Lenarduzzi, who's a person that's like, you know, here's how to make a YouTube channel and everything. She's talking about how to make courses. So she has a course about making courses, but everybody's saying that it's already over. Well, kind of funny. But I think so. I've been writing this little strategy document that is kind of like, here's how you should get started, in my opinion. And I think I could turn that into a book very easily, yes. But it's going to be a free PDF that's probably going to be about 15 pages, I think. Oh, options. So AO, I don't know if you were asking me if I trade options or not. I've made a few options trades, but I don't do it very often. Reminds me of that Yo Dog meme. Yeah, you suffered that now you can do the Yo Dog meme with AI, right? Oh, the world we live in, guys. It's the future. So we got what? A minute and a half. Okay, so I think I gotta really focus for this because I've kind of been my mind has kind of been a little all over the place today, hasn't it? No earlier news for you this time? No, there wasn't 8:30 news today. No. But we got manufacturing ISM manufacturing PMI coming up. So the let's see here. They're looking for a reading of 48.5. We're also going to get jolts, which the estimate is 10.05. Wow. Okay, so they're really even for ISM, that's a pretty significant pull. So the liquidity is going to be crazy here. Okay. So the manufacturing was 48.4 versus 48.5. So that I think is probably insignificant. Oh, this is interesting. Jolts 10.458 versus 10.05. So the job openings was higher than anticipated and higher than the previous month. That's not good. That's probably why they're selling. But then when you look at ISM manufacturing prices paid, 39.4 versus 42.9. So the ISM, I think that the ISM kind of suggests that the economy is getting weaker and the jobs openings does not. And they decided to sell on the job openings. But I'm skeptical of the job openings, to be honest. I don't believe them. So that's an awfully speculative trade here to sell at 3.69. Especially since it really seems like they're in a selling mood today. What about the spreads? The spreads flattened. Okay. Okay. Not quite sure how I feel about how I got filled there, but I am seeing the volume come into the treasuries short, so ouch. Okay, that was good, although the micros didn't really move there. The 30 is lagging a little bit because it is a flattener. Should also note that what we're seeing in the S&P 500 doesn't seem to match the usual correlations that we see with the treasuries. Who is even working over there? No, you know what I think it is actually is I think that the companies are putting the job openings out there then with no intention of them being filled. That's what I think is happening. Because I tell you what, I'm not like looking for a job or anything, but I get a lot of messages on LinkedIn because I visit it every day to look at what other people in the quant space are saying. And I used to get like 3 messages a day from recruiters, and now I don't get any. Oh, the Jolts quits. Oh, I don't have that number up. Yeah, it doesn't. My Squawk doesn't give me that number. $4.173 million quits. But see, I think the thing is that I think there's probably a divergence too. I think that there's a lot of people that were either laid off, like say from Twitter, or people that are quitting their jobs, and they're probably finding jobs really easily, right? Especially like in tech sectors. But there's probably other parts of the economy that aren't doing very well. And I just, the whole concern that I have right now, like the thing that like I'm the most unsure about and like I'm watching the most closely, wow, there's a big stack there in the 5-year. Wow. Okay, anyways, the thing that I'm kind of watching is that there's a discrepancy between like the headline non-farms payroll number and the home survey. So and then there's been some other things saying that, yeah, like the payroll survey has been overestimating the number of jobs that are out there by like 1 million, right? And then you look at Jolts. No, okay. $10. That's fine. This could continue lower and everything and end up being like a you should have kept it, but I feel like that both for me, the way that I'm doing today, and for the situation, that getting $10 out of it is not bad. Yeah, Jolts quits is voluntary quits. Okay, yeah, that's what I assumed, but to be honest, I never put a lot of stock into the Jolts number, to be honest with you. So this is really interesting. It feels to me like the treasuries are reacting more to what the S&P 500 is doing more than anything. Because you see how the S&P 500 eventually decided, oh wait, this is bad, and then the treasuries started getting bid. But there's not like volume coming into the treasuries. They just moved up on the correlation. Or is it because the dollar is moving up? The dollar's starting to move up quite aggressively. That might be why the treasuries are doing what they're doing. So anyways, if we would look at the labor market, what do we see? Jobs created is trending down, but is still okay. There's a divergence between the establishment and household surveys. There have been some other reports suggesting, like from one of the Fed banks, I forget who it was, suggesting that the payroll survey is overcounting by 1 million. One other thing they're saying is that a lot of jobs are being double counted because they're like one person having 2 part-time jobs, right? And then meanwhile, jobs openings remains high, suggesting a tight labor market. I don't think that all of these numbers quite make sense. So I mean, the thing was, if we just look at it at face value, which is kind of what I feel like the Federal Reserve is doing, then that means that interest rates are going to have to go a lot higher, right? But that's not quite what's happening, right? They did go higher, but only by like a basis point. And then when you look at all of the business activity indicators, like the ISM was weaker, but it was mostly in line. But then you look at prices paid, like prices paid came back big time. When I look at those numbers, I'm seeing stuff that is kind of suggests deflation to me. Yeah, doesn't like a 39.4 in prices paid suggest deflation to you? So that's what we're kind of looking at. So, okay, so now things are kind of shifting. Now maybe we'll get both the E-mini and the treasuries moved down together. The dollar is moving up. There's a little bit of pushback there at 38.45. I think what we might be getting, oh, let's just give it a little bit of time. They're right back to my exit. I wonder if, you know, I said that the liquidity was pulling really aggressively before that news, and I thought it was a little odd even for ISM, but maybe they care about those jolts. All right, now they're giving you a big spread there in the micros. Who was that one of you guys that just sold at 3.712? Was that one of you? I want to know. Not that I'm saying there's anything, it was just kind of interesting. There was like this big spread, somebody came in and closed in the spread, and somebody immediately hit them. Whoa, okay. So there was a little bit of a aggressive buying volume there, followed by a stack at 08 that immediately pulled, and then they slipped back under it. You made my chart? I do. Wait, can I see? I think that I can like pull it up from oh, which one was it? Oh, you didn't save it. Oh wait, why did you make an account? I understand. Oh wow, they moved right back down real quickly there, didn't they? So it's kind of like I said, like there was like the initial move, and I could see that there was like the hole and it was falling back, so I got out. Looks like I could have held on, but I would have had to have held on for like 100% retrace, and then some. That wouldn't have been very fun. Yeah, share the Imgur link. That would work. I want to look at that because I'm, you know, I think that we need to give this some time here because I clearly, it seems like I think I understand it, but I'm like really skeptical of it, so I'm not entirely sure. Oh no, that's interesting. Okay, so you put Hamlin as an S tier. Powell and Hamlin are S tiers, huh? Weren't you the one that was telling me that Powell wasn't that good, relatively speaking? And Eccles is an A tier. And McChesney, I'll have to look him up. There was a couple of them that it was like, that's so you. Oh, he puts Paul Volcker and Alan Greenspan down at the bottom. That's so funny, dude. Oh my gosh, man. You say Harding and Meyer were the worst ones, huh? So what I found was that when I tried to look up information on a lot of these guys, I couldn't find it, you know? Charles S. Hamlin. Oh, he was the first one. Oh yeah, exactly. Actually, so like I started digging into it, and somebody had written like a history of the Federal Reserve using primary documents and everything, and I was like, oh man, this is what I got to read. But like, you know, you realize that a book like that is not just casual reading, you know. Like you're talking about a book that like only maybe one person in the world is qualified to write, sort of a thing. Oh. McChesney served until January 30th, 1970. He served under 5 different presidents. He was known for his tight money policies and anti-inflation bias. With his banking background, he emphasized the importance of statistics over economic theory. At the same time, he also pushed for the Fed to have flexibility and discretion in its policy making. Like it. In 1956, he famously described the Fed's purpose to Congress as leaning against the winds of deflation or inflation, whichever way they are blowing. Martin was also known for his willingness to listen to opposing views, although he had the gift of influencing others. Under Martin, all Reserve Bank presidents participated in Federal Open Market Committee meetings, although he had a reputation for being compromising. Martin did not shy from conflict. In 1965, he famously clashed with President Lyndon Johnson over the discount rate, raising it despite the president's objections. Good for you. Hell yeah, I love this guy already. Because I hate Lyndon B. Johnson. And I hate when the president tries to say what the monetary policy should be. Go you. Love it. After leaving the Board of Governors, Martin served on the board of several corporations and nonprofit organizations, including IBM, American Express, and the National Geographic Society. He also worked as a lawyer at Riggs National Bank in Washington, and he died in 1998. So if he died in 1998, then how come we only have a black and white picture of him? William McChesney Martin Jr. Well, either way, I think that your ranking of him is justified. I have not much to complain about Powell. He does good so far. Yeah, something that I find really interesting about Federal Reserve history, and this is something that this guy that wrote the book about like their history, that's I think he's not done. I think it's gonna be like a 3-parter. But he was saying that some of central banking's greatest achievements usually tend to come right after their greatest failures. Like what'll happen is they'll screw up big time, and then they realize why they screwed up, and they'll fix everything, and they do such an awesome job at fixing things. Makes up for it, I guess. So like when you look at Powell, it's kind of like, yeah, they screwed up. Maybe they pull off a soft landing. Like if Powell pulls off a soft landing, then he's S tier for sure. He's S tier for sure if he pulls off the soft landing. I don't know what's gonna happen. Won't he also get an Oscar? Well, I didn't think that much. He looked red in that photograph, so I put him oh, okay. But here's the thing. If he doesn't pull off the soft landing, if the economy goes into a recession and then it ends up being like a really long drawn out recession because inflation is still high and this sort of a thing. No, he did not say that the soft landing is impossible. In fact, it was only last meeting he said he still thinks that it'll happen. I don't know if he actually believes it, but that's what he said. Okay, we are getting some signs of square root law coming in here at 05. So far, it looks like I missed out on another $10. Now, listen, I was there. I watched the press conference. I remember he never said that a soft landing is impossible. And they definitely didn't say that in November. Okay. Because I remember so what happened was in November, you're the one that remembers it wrong. I get into this with my wife all the time. She's like, no, this is what happened. I'm like, no, this is what happened. I trust my memory. I don't know why when you have ADHD, you remember things wrong from other people, but I feel very confident in my memory. And what he said was he thinks that the chances of a soft landing have decreased, certainly, but that he still thinks it's going to happen is what I recall he said in November. He definitely did not say that it was impossible. And then in December, he kind of was even more bearish about it, but he still was like hopeful about it, that it was going to happen. There's no, if Powell himself had said that a soft landing was impossible, like the market would have like crashed so much harder than it has. Well, maybe they are knowing they screwed up. Sometimes maybe they do things on purpose. Who knows? You know, maybe I that's kind of one of those things that I can't really prove, right? Like it's kind of an unanswered question. So it would be a lot more interesting in terms of debate of Federal Reserve policy and so on and so forth if they pulled off the soft landing, because it's pretty much always been the case that the Federal Reserve embarks on a hiking cycle and it crashes the market, right? I don't know if we've ever had a cycle like that where they didn't outright crash the market. Maybe there's been like little ones, but certainly not a situation like this, right? So if we went through a situation like this and we pulled off a soft landing, I think that would be a significant data point in central banking history to come in and say that, well, we can control inflation and control the monetary supply without crashing the economy, and we just have to, you know, get the amount and everything right. You know? So I personally believe that one of the big problems is that should we call it a problem? Let's call it a challenge. I think that the big challenge is that because the Federal Reserve tools have a lag, and because the Federal Reserve tools affect everybody, and as such, they have to be very risk averse about it. And so that results in them always being a little bit late and always taking things a little bit too far. Right? So if they had a situation where they got it just right, that would go a long way towards helping them maybe calibrate things and you know, reduce the volatility of cycles. I think you remember the statement as Reuters published. They said it narrowed. Yeah, he said that the path to a soft landing has narrowed. He did say that. But he was still hopeful about it. So I think everybody has to admit that it's narrowed for sure. Man, maybe I should have. Oh. No. I'm okay with it. I'm a little disappointed, but I'm okay with it. I'm wondering how far this is going to go, though. So right now, the Treasury is kind of getting into that spot where it's like, I feel like it's too dangerous for me to try and go short right here. And then, like, it just keeps going sort of a thing. At the moment, I'm a little concerned because I did see some signs of the square root law kind of coming into play at 05. And then we just got another forceful set of flows pushing us down. So there is a chance that we get sucked back to 05, rebalance before moving lower if we're going to move lower. Last time a central bank head was hopeful was a Mervyn King. Still, dude, what do you think about my larger theory here, though? Which is if they pull off the soft landing, Jerome Powell is S tier, and if they don't pull off the soft landing, then he's F tier. I feel like that his legacy has a lot to do with how the next, how 2023 plays out, right? How 2023 plays out is probably going to determine what his legacy actually is. See, it's not stopping. It's not stopping. 373 could take it. It seems like the retail traders are more than willing to trade volume there. Whatever happens, he's S tier in my tier book. Okay. Okay, actually. Well, I would say that it's a little bit more fidgety down here. Like we've come back across this range between 03 and 05 or so, like 3 or 4 times. It's just they haven't gotten back to like what I felt was like the center of that imbalance and like built a really clear point of control and stuff. So I got a bigger question for you. I don't know if that was funny, but I don't know if we can go much further on that one. Clearly actually believes that how good looking they are is a significant factor in the Federal Reserve president. So I have this video out the first day of that video was like way above trend for the Ninja Trader video. So I saw this thing the other day where Mr. Beast was saying like, where he was teaching people about how to do YouTube, and it was just about thumbnails. And he's like, make like 50 thumbnails, like make 50 great thumbnails, and like make a great thumbnail and then build a video around the great thumbnail. Like, because the thumbnail has such a significant impact on things. And I think that, a 24 Ninja Trader tips at something, that's a thumbnail that I would expect to do well. Yeah, so that's probably why that video is doing well. But I'm not 100% sure what I want to do next. There's one video that I promised you guys that I really need to get together, and it's hard. And maybe this is one where we make a bunch of videos like this until we really get upon the formula. But basically it's the macro stuff, right? Trying to explain the different correlations that happen in markets and why they happen why they tend to be the directions that they are. There's a lot of information and so forth. I've kind of been taking it 2 ways. One is like, here are the different instruments and here's how they react to different things. And the other way is, here are the different kinds of environments and how the different instruments tend to work in those environments. So I think that the video I'm going to make is kind of going to combine those two things. That's going to be a macro video. Another one that I've kind of been planning that I think would do well, because I've seen other videos on this subject that have done well, but I don't think that they actually answered the question very well, is like, how much money do you need to start day trading? Okay. Beyond that, I don't really have super strong feelings about what videos I should make next. Because if you think about it, like if I was making a video every week, I think I'm still going to do every other week, but that still only puts me through to February. So I got a whole other 11 months of videos. But what am I going to put out? You know what I mean? So let me show you. I have a little note here with some of the ideas I've had. I'm wondering if any of these ideas stand out to you guys, or if there's a subject that you think would be really good for the channel. Okay, they did come back. My instincts on that one was right, although it looks like they didn't quite come back to my exit. Can NinjaTrader ever not be a platform made by... Why do you say that that's made by babies? I don't think that's very accurate. Yeah, there you go. Macro, and then how much do you need to day trade? Oh yes, the problem with volume profile. There was another one that was the problem with that, but I can't remember. What's the other style of trading that we got? There's price action, and there's volume profile / candlesticks. There's order flow. I guess we could make a video that is like the problem with order flow. That would certainly get people that are longtime viewers of the channel to click, wouldn't it? Footprints. Yeah, so I'm going to cover footprints in the volume profile video too, if we make that. So maybe it's not volume profile, it's, I don't know. We could say the problem with volume profile and footprints. Oh, how many trades should you take? This is the interesting, this is kind of what I was getting at. So to me, this video right here, how many trades should you take a day? That is a piece of information that could possibly be one of the most useful pieces of information I can give to a retail trader. The answer is as few as possible. Okay. The more that you, as a discretionary retail trader trade, the more you churn, generally the less you make. Because what happens is you're taking trades when you don't actually have edge. So you only take trades when you actually have an edge. And given that markets are very efficient, you know, the number of situations where you really have an edge are going to be pretty small and narrow. So you really actually, you know, one a day would not be bad. I'm not saying that it's like you took more than one trade a day that it's bad, but you should just understand that like you're going to do better if you can just take like one trade and hold it all day, right? But no, if I have a video like that with a thumbnail and everything, I don't think people will click on that. You know what I mean? Like what does the best on YouTube, not necessarily what helps you the most. But the thing is I've made most of the videos that I think help people the most, you know? So now I can kind of focus on what would be a good thumbnail, what'll grow the channel the most. We still, you know, so like the macro one is a big one. Omgren Chris would be a big one. I don't know as much about Omgren Chris as I want, so that's where I would want to be doing my own deep dive and kind of use the video as a fuel to research that and stuff. But I still want to make this is the biggest live video. I don't know if that's one that like people would click on or anything, but I think it would be a fun video to make. The time for that one is probably past. Bitcoin sucks. That's another video. I don't know why that's all the way down there. Best resources for informed trading. Nah, I don't think that that's it. It should be like, let's put it somewhere up here. Best financial news. I would like to make a video that is like, how does Bloomberg compare to the Wall Street Journal compared to Zero Hedge, etc., etc. Why crash profits are mostly wrong. Can I make a whole video about that? Maybe I can. But see, that's what I guess I didn't really state our goal here very well, right? So the thing is, there's the things that I know will help you the most, and those are kind of the things that I got up there at the top. I think I'll put this one up here. I think that best financial news can go ahead of Almgren Chris. I think that dealing with tilt is another one. The question is, what do you want to hear from me the most? Right? Because I think that the way that I would prioritize things are things that I think will help you the most, the things that the audience wants to hear the most, and then only after all of that, the things that will bring in the most traffic to the channel. Right? Wall Street Journal is the best one. You get the BUXX index. I got to tell you, man, I have not been impressed with my Bloomberg digital subscription. It's okay. It's okay, but like the honest truth is that I get more from just reading Zero Hedge for free than I do with the Bloomberg's digital subscription. And then when I pay for the Zero Hedge one, I get real actionable information that I can like actually base real trades off of, like really strong predictors of order flow that they give us on Zero Hedge. And I don't know what the Wall Street Journal has, but I'm gonna bet that it's not as good. The only good thing about Bloomberg is the chat. Well, but you don't get the chat room with the Bloomberg digital, right? See, this is why I think this one would be a good video. Like, I think that it would be, not only would it be an interesting video that generates a lot of discussion and controversy, but it might be clickable. So that maybe should boost that video up a little bit in the ranking of how bad, you know, how badly do we want to make it. So yeah, this is what you get. It just allows me to read everything on their front page without the paywall, but that's it. I just don't think that it's worth what they're charging for it. You know, you get like their podcasts and everything, and the thing is what I'm finding is that Bloomberg Digital, like, the audience is different. Like the audience for the Bloomberg Digital subscription is not retail traders. The audience for them are people that are maybe a little left leaning and want to read news and think that financial news would be better for them. But it's mostly for entertainment. It's not for people making financial decisions, because they assume that those people are using the Bloomberg terminal. Right. What about the dollar? A video about that might help, maybe. What do you mean by that, Tobias? Seeing those headlines, the audience is a 65-year-old man who wants to... Yeah. Now, so I think personally, so like, let's see what we got. Wall Street Journal. And then we got what? Financial Times. And then who else do we get? It's like alpha something. What's that other financial website that's like Alpha Seeker or something like that? Oh, yes. So that's the top one. So in the macro video, we'll talk about the dollar. Yeah. Just, I think that the macro video is the one that we're going to have to take like multiple shots at. Seeking Alpha. That's it. That's it. Yes. You don't like Seeking Alpha? Is that why you're throwing up there, Akshay? So, I think, here's the thing. I haven't had like a subscription to all of these. I think that for the Wall Street Journal and the Financial Times, I'll just do like trials or something. I know that there's like smaller guys that that you could probably utilize too. But the question is, which would be the best source for a day trader? For me, what's the best source for me, for Seth? And I think that my ranking is Zero Hedges first. Maybe next to Wall Street Journal, and only because they have some exclusive stories that have moved the markets from the Wall Street Journal. I think that's the only reason why I would rank them high. And then I would probably put CNBC. Now, CNBC, I don't think is going to give me actionable information per se, but I think that where CNBC might be interesting is that they are focused on like retail investors. So you might be able to get more information and ideas about investing strategies and stuff from CNBC. Could be wrong. And then I think the Financial Times. So the Financial Times is Europe's, version of the financial news. I think that you get a lot of highbrow, good information from the Financial Times. I'm just not sure how directly useful some of it is. Would certainly help me understand what's going on in Europe a lot better if I had a Financial Times subscription. And then maybe Bloomberg and like Seeking Alpha. What's another one we can put on here is the Financial Times is the worst one, really. If a day comes I need to consult these ones, I would spend the whole day on Wall Street. Bets. Barron's. Okay, Barron's is one. Who's the other one that's like, oh, Motley Fool. Motley Fool. Premium members. So like, oh, Market Watch. Yeah, Market Watch is not as common. I don't know if they have a good subscription or not. Let's see. Latest. I don't see anything there. I think I have an account with them of some sort. I'm just signing in with Google. Still at 06. So I think that, I tell you what, my instincts on that move were really good. So I said, it's going to come down. It's going to whip back. There's a possibility that it goes lower, but I'm not 100% sure. I probably could have jumped on that one again. I have a hard time like getting out and getting right back in. right? So that one was probably just too quick for me to take advantage of, but I did kind of feel like maybe we'll continue. But then when we pushed a little bit lower than I expected, I said, no, I don't think that I want to get in it here because it's going to come back to the 06, and it did. So I was able to see what was going on with the flows on that move extremely well. The Financial Times journalists would come in asking for comments. The guys would tell them to go F their moms. The Financial Times journalists would still publish something that was entirely made up and had nothing to do with what happened. That's funny AF, man. Profile settings. I don't think that MarketWatch has a paid service. Oh, no, they do have subscriptions. Wait, you get a subscription to the Wall Street Journal by subscribing to MarketWatch? What? Oh. I get limited free access to the Wall Street Journal. $2 a week. Or the digital bundle, which gives you Wall Street Journal, Barron's, and MarketWatch for $250 a week. So what does that tell us? That means that Barron's, the Wall Street Journal, these all go under, right? So we don't actually need one for Barron's or for MarketWatch. There you go. That's a deal. I think on this one that it's like, we'll make a video about this and I'll go through there and it'll be like, Bloomberg Digital sucks, right? I think that everybody will have opinions about this. And then probably a bunch of people will recommend a bunch of smaller ones. So like one that I find really interesting is MacroHive. MacroHive is really interesting. They will give you like every once in a while they'll give like a free week or whatever. You can go and check it out. I don't know if this is one that I would like visit every day, so that's where I'm kind of like I don't know if you're actually getting your money's worth. I think it's like $30 a month or something like that, but that's like a smaller one. What is it, the bond desk, this guy right here? They have a website. What is it? fidesk.com. So this one is interesting to me because this is like much more along like what we do, right? It's like fixed income stuff. And so every once in a while you do get information that would be like actionable and useful to us that you don't get anywhere else. Like this is where I go when that's like, okay, was there like a really big issuance that I missed or something like that, you know? But again, it's like, I don't know if it's like every day on the desk, you know, and it's expensive too. This one's expensive. What else is there? There's some other ones. I found journals that are like specific to like fixed income, but kind of more from the like you're gonna buy municipal bonds sort of things. The Macro Compass, huh? I've never heard of that one. Macro Compass. It's a Substack. That's not bad information. So I tell you what I want though. Guru Focus? I haven't heard of that. So here's what I like about Zero Hedge. If I just come down through here, okay. So first of all, do they have the news about the things that are moving the markets today? So what is moving the markets today? Well, Fed Kashkari said something, and we had the ISM, and look, they have stories about it. Now look, if I come over to CNBC, let me refresh the page here so we just get the cleanest look of it. Okay. So where do we have either of those things? Surely it's there. Surely it's there. Maybe. Come on. No, I'm not even finding it. ISM. If I just search for the ISM here. Yeah, they got a squawk on the street video, but not something I can read on CNBC, right? And it's just going to be like, this is what the number was. Whereas if I come to Zero Hedge, it's like, here's a deep dive into what it said. Here's some important survey comments from it. Here's kind of what we think it means. Excluding the lows registered during the 8 months of the global pandemic, the current PMI reading is the lowest since the first half of 2009. Okay, so they're saying it shows real weakness in the economy, right? Okay, coming back over to here. What else do we got? So here's like a morning news rundown, sort of like before you start trading sort of thing. So that's good. This is from somebody else. This is probably reposting an article on somebody else's website. Oh, maybe not. It's Tyler Durden's. But the other one I'm looking for, I think I have to go to yesterday to give you an example. All right, here we go. And then we get these articles, which tend to be premium articles nowadays, where they talk about like what these major analysts are saying, right? Like they're posting stuff from Nomura, right? That's what I really want. Because I want flow trader. I want flow analysis from the banks. I want the flow analysis from the banks. Zero Hedge is the only place I've ever seen it. It's the only place I've ever seen it. None of these other places have it. So it's kind of like some of these, like, Barron's and Seeking Alpha and Motley Fool might be interesting for individual stock picking. But I don't know if they're as good for what we do. You know what I mean? So yeah, I think we'll do a first video that'll be Zero Hedge versus Wall Street Journal versus CNBC versus Financial Times versus Bloomberg, and I think Bloomberg loses that battle. And it's not just because I'm bitter about that I forgot to cancel my subscription. Nick Timmermans, Fed Chair Jay Powell, is set to speak next Tuesday, January 10th. On a panel that will discuss central bank independence in Stockholm at a symposium organized by Sweden's central bank. So that's probably not as big as the last time that he spoke, but people will definitely be looking forward to that. Whose website is Ugly Guru Focus? It's like red and blue. Tiny print. Really. One of the things that I hate about some of these websites is that it's like, where's the shit to read? Oh, okay, here's the small ones. Kathy Wood loads up on more. I don't care. I mean, I guess I care, but I don't actually care. New Year membership promotion, 30% off. PhD, huh? Bazinga is another one that you could probably put on the list, right? Surely, I'm hoping though that what'll happen is I'll make that video, and then other people will come up and be like, "Ah, what do you actually want? Is this?" And then, yeah. Anyways, that's what I do on that video. I spent like way too much time on that, but it's a really interesting subject, isn't it? Still kind of slowly rising back up here. We are back to where I got out at now. So like, look, there was $20 in it, but it would have been hard for me to get that. So I think maybe I would have only have gotten 10 more from it, which is okay. Well, it's almost time for me to get going here. Let's see if we can do our memorization again. Okay. So we're only doing the bottom part here. It's investment contracts, limited partnerships, whiskey depository receipts, whiskey warehouse receipts, multi-level distribution arrangements, merchandise and marketing schemes, voting rights, voting or collateral trust certificates, pre-organization certificates, and farming or livestock interests. Oh, I got them. I got it. I did it. Yeah, but will I remember it tomorrow? Hard to memorize things, guys. Anyways, I'll leave you with this list here. Some videos that you think that we should make, because here's the thing, is if we're supposed to make a video every other week, that's like 20 videos. So there's going to be plenty of room to make videos about things, and probably we're going to make a lot of videos about current happenings. So I think that after this non-farms, maybe the next video should be kind of a more macro based one, to kind of take inventory of where we're at, right? Can we please votes to impeach? No. It's still the best charting. I wouldn't execute on it, but it's still the best charting platform. And I know a lot about it, so I can provide a lot of information about it. So I think that we probably will make more Ninja Trader videos based on how people react to that one. I think that there will be like certain questions and stuff that will give me an idea of like what would like interest people the most. But we should be always looking here to be like, okay, here's a subject. We should make a video about that, right? Or if there's something that you want a video about, this year is going to be a good time to bring that up, because I don't have as many ideas about what kind of content I want to make as I normally do, because we've made so many great videos. Really is, when I go back and I look at the channel, I'm really impressed with myself about how many great videos I have. I really like the videos, and I feel that if you're getting started in trading and you want to trade futures, that you're going to learn a lot from watching my channel, and that I'm giving people a much better chance at being able to be successful with futures. So I'm really proud of that, and I'm happy that YouTube is picking it up. And it's kind of scary. It's like, wow, if YouTube does pick us up, that just obligates us to make even more videos. What will I make? Oh no. It's okay, we'll figure it out. And you know what? The other thing is that we're going to learn a lot about portfolios, so we might be able to shift into portfolio management kind of stuff. So that'd be fun. Anyways, so think about that. Tell me what you think next time. In the meantime, I think it's time for me to get going. What should we say? PMI, Jacques Markets. Weak PMI. I don't know if I can say that it's like weak. I mean, because we've recovered most of the downsides, so it's kind of mixed trading. It seems like that data point was important, but that there's maybe other things going on, like just non-fundamental flows coming through. So you can trade. Yeah, you can trade with the chart. I don't know. I'm not saying that the way that I trade is the way that everybody should trade. I think it's the most fun though. Okay, guys, I do need to get going. I will see you tomorrow. In the meantime, stay excellent, team.